What happens if your company doesn't exist? Does the world collapse? If the world is fine, that world, that subsector, the marketing world as an example, is fine without your company, then you should not be doing this company. Venture business is about credibility building. You can't just invest in somebody you met last week and say, okay, here is $1 million check. Nobody does that. Sometimes we see founders, oh, I'll build it and I expect an exit in 3 years. No, I don't know. Good companies are bought, not sold.
Okay, I like that. Hi everyone, welcome back to Raisable Founders Hub. I'm Basil Dab, and here we transform entrepreneurs into raisable founders through mindset shift. That's why we make this content, through educational and mentorship programs and networking and community building here in Silicon Valley. And I'm super impressed to have a special guest today, Sanjit Singh Dang. Sanjit is seasoned venture capitalist. Sanjit is chairman and co-founder of YouFirst Capital, with the investments in companies like Nextdoor, DocuSign, Palantir, and many others. He is a former investment director at Intel Capital. He has a technical PhD. He has an advisory role in the United Nations on AI. We will ask about that as well. But before we dive in, please don't forget to subscribe to our channel, give us thumbs up, and share this content with a friend who may benefit from watching it. Sanjit, hello.
Thank you, Vasil, for the nice introduction, and also thank you for having me on your show.
Thank you very much for your time. Really appreciate it.
Pleasure is all mine.
So we crossed paths when mentoring entrepreneurs at one of the Stanford Technology Venture programs. And from our first conversations, I mentioned that you have access to the very best deals here in Bay Area. And not everyone knows that when entrepreneurs are fighting for the VC's attention, at the same time, many VCs are trying to get allocations in the best companies. They compete as well. So how were you able to get allocations in such great companies?
It's a great question, actually. And you're right. Most entrepreneurs think they are competing for VC's time a lot, but the flip side is true as well. VCs are trying to chase a few good deals, and because that's what drives the returns for their funds. VCs are also competing to get allocation in those deals. And there are some good founders across stages, seed stage to late stage, when VCs are trying to get in. So that is true. And, we do get this comment quite a lot. How do you get into so many good deals in Silicon Valley? And, there is no perfect answer. It's basically a lot of work in bringing value adds to companies, bringing our network, but also more importantly, sitting with the founder, understanding his or her strategy, what he or she wants to build from a product standpoint, but help them from hiring standpoint as well as from customer and partner relationship standpoint. And I think founders value that. There is a lot of capital in Silicon Valley. There's no dearth of capital, but there is dearth of value added capital in Silicon Valley. So I think we have tried to stick to that swim lane where we can hopefully bring good value to the founders. And then, relationship with the founders grows over time. Sometimes they refer their other founder friends to us as well. We, just invested in a company that somebody from OpenAI left. So it's 2 people in a garage company, still in stealth mode. Somebody left from OpenAI, a PhD guy, researcher at OpenAI. Prior to that, he was at Google Brain. We invested in that, and now he's referring his colleagues at OpenAI to us. I just got an introduction email today morning for that. So that's how it happens. And I think if you stay true to the founders in value add, in terms, in speed of execution, etc., I think they recognize that. And founders need help. That's a fact. But they want true help, not just here and there some warm introduction once a quarter, show up in board meeting and that's it. So that has helped us a lot. And also, secondly, what has helped us is beyond founder relationships, what has helped us is when a founder leaves his first company, he's successful, moves on to his second company, then we want to be the first check-in to that company as well. There are several examples of companies where we have invested in those cases, together with other VCs like Lightspeed, Mayfield, Khosla Ventures. I think in those cases, the risk profile is pretty aligned with venture business because the founder has the wherewithal to be able to raise more money if needed. And we also feel very confident. And we have typically have had some relationship with the founder. So we know the strengths and weaknesses of the founder. We know where he can shine. A good example is a company called DevRev. We invested in this company a couple of years ago. The founder and the founding team, Dheeraj Pandey and Manoj Agarwal, they were both at Nutanix. Dheeraj was the co-founder and CEO, and Manoj was one of the executives. They built Nutanix. It's a $14 billion publicly traded company, and now they're on to their next gig, DevRev. So we are in it, and we have had a relationship with them from early on. We just invested in another seed stage company a few months ago called Wisdom AI. The Rubrik, one of the co-founders of Rubrik, along with another executive at Rubrik. Rubrik is now a publicly traded company. One of the co-founders left together with his colleagues at Rubrik. They created a new company. So we are part of that as well. So, driving value for the founders, driving also being loyal to them when they need help. I think that has helped us deepen the relationship with such founders. And also VCs share deals. So we have been in the Valley for over 2 decades. Both Ekta and I, we are the two partners in the firm. And we've had good, deep relationships with some VC firms. And we share deals with them, they share deals with us. So it has been a good symbiotic relationship with the VCs as well.
So 2 main sources. First one you mentioned is other
solid founders,
and the other is other VCs.
Other VCs.
What about the cold channel?
Cold channels are fine. You can try. We have also tried. But venture business is about credibility building. You can't just invest in somebody you met last week and say, okay, here is $1 million check. Nobody does that. So I think it is about developing trust with the VC and making sure the VC understands what you are building. VC knows you. At the end of the day, this is about people. We are investing in people, not the company. Sometimes, when we do a pitch session, an entrepreneur is pitching to us. After first 10 minutes, I shut down the projector.
It's enough.
Yeah. Projector, they're prepared slide. It's like, I don't want to pick on companies, but it's like McKinsey or Deloitte scanned slides. They all look pretty. But I want to understand what is in the mind of the entrepreneur. So I say, okay, let's do a whiteboarding session, because that will give me a better understanding of how and why a founder thinks the way he thinks.
Mm-hmm. So what are your typical questions?
The typical questions, I want to get to the meat of what is the problem statement. Somebody comes to us and says, hey, okay, I'm building a Gen AI solution for marketing. That means nothing. There are a million companies trying to do that.
What would you like to hear?
Yeah, what I would like to hear, what is the exact problem within marketing? Is it that the marketing folks in a company like Cisco or Oracle, are they not logging data into the CRM? Are you going to assist with that? Are you going to do analytics on the data that has already been logged? Are you going to do something else? Are you actually going to build an AI layer on top of CRM and abstract out the CRM? There are so many ways to slice the cake here. But you ought to be able to show me in a very pinpointed manner, this is the specific problem I'm going after. And here is the persona that I'm going to either disrupt or assist.
Persona, you mean
persona of the person within a company. Correct. Is it the data analyst in the marketing team? Is it the marketing strategy professional? Is it the CMO? Is it somebody else? Who is the exact user? So I expect the entrepreneur, and we as VCs are not perfect either. We're actually learning from entrepreneurs. So I expect that the entrepreneur has deeper ideas and has done a full study of the sub-segment that he or she is going after.
Okay, so problem.
Be very clear about the problem.
Yeah, what else?
So then after that, then what are you building? Show me, paint a vision of the world with and without your company. How will your company change the world?
Your vision, your long-term
vision. Because especially if you're investing at an early stage seed, Series A, the entrepreneur is still figuring out the product. They may have some early customers, design customers, but it's not enough validation. So we are really investing in the vision of the entrepreneur at that point, right? They say early stage investing is from the heart. Late stage investing is from the brain, because you have metrics by then. So at an early stage, I want to understand, okay, show me what are you building? What happens if your company doesn't exist? Does the world collapse? If the world is fine, that world, that subsector, the marketing world, as an example, is fine without your company, then you should not be doing this company. And then show me, for a company to really take off, I believe there is some figure of merit that has to improve by 10x, whether it's cost, whether it's convenience, whether it's flexibility, whether it is something else, some dimension. Some figure of merit has to improve by 10x. Show me which one that is.
Your main KPI.
Yeah. What are you going to improve by 10x for the specific persona within your segment?
And for the specific time frame.
Yeah, and within a time frame. You can't take 20 years to do that. You have a finite time. Unfortunately or fortunately, the funding cycles run in 1 to 2 years, right? So you raise a seed round, let's say $3 million, $5 million. Then you have to raise a Series A within 2 years, $10, $20 million Series A, maybe more. So you will really have 2 years to get to the Series A metrics, and then so on for Series B and C. So you don't have time. You're on a treadmill. Your velocity of learning has to be very fast. Even if you fail a product, the feature didn't work, or the customer said no, or the customer churned, that's okay. The velocity of learning has to be very fast. So you got to accelerate.
Would you prefer a founder with a clear problem statement, but a clear understanding of the market and customer development, but without an MVP yet?
Yeah, MVP is fine. You can demo it. I can see the product. I know that the product will have to pivot. All companies pivot. So you can show me some product today and some financials today, but I know that in a year from now or 2 years from now, you will have a whole different story.
So you're pretty sure about that?
Yeah. For early stage companies, it's a given. Very few companies stay on the same track from inception to IPO. Very few. Most companies go through, they have to meander along the track. So they change the product. The customer gives feedback. Or the markets change. A GPT comes up, iPhone comes up, something happens in the market. Markets are not static, they're dynamic.
Yeah. Is it important to see the market slide and understand how fast the market and how fast it grows?
Yeah, better to do a bottoms-up analysis versus a tops-down. If you are facing, let's say, if you're selling to developers, product developers, then let's talk about how many developers are out there. How many in the US, how many outside the US, how many can you really target out of that? How much can they pay, right? Let's start doing the bottoms-up numbers versus telling me Gartner has said this particular the AI on CRM market is $1 trillion opportunity. I mean, that doesn't mean much. Yeah.
Okay. And what do you think about the team slide? Many founders put it on the first part of the presentation, even the first slide, and some put it to the end. What do you think?
Yeah, I think the team slide should be at the top.
At the top.
Like I mentioned, this is venture business is about investing in people. Through this whole exercise of going through problem statement and their solution and their vision of the world, etc., we're trying to understand them. You're trying to actually understand the person, the founder. What does he think? Where does he shine? Where are his weaknesses? And can I help where his weaknesses are? Right. So yes, absolutely. Team slide is number one.
And what about business model?
Business model, it depends. There are well-established business models. If you invest in an enterprise software company, you already know what a B2B enterprise software company's business model will be. They will do tech licensing, product licensing, they get paid X dollars a year, etc. Or if they go along and sell as, hey, I am an AI agent now, or I am an AI teammate, then that's might be a different business model. So the business models are evolving also. But for most part, there are well-established business models within the sector you play in. If you're selling to consumers, B2C, different story, right? So they have to talk about the business model, potential revenue, where does it get to, etc., etc. And one key metric that VCs think about, even at an early stage, is, hey, can this become $1 billion company? And then over time, $5 billion, $10 billion valued company. For you to get to that, you have to look at the standard multiples, valuation to revenue multiples or valuation to ARR multiples. Let's say the multiple is 10x. In the SaaS world, multiples run around 7 to 10x roughly. So then that means you have to get to at least 100 million in revenue or ARR. Can this company get there? And then you start breaking, as a VC, you start breaking it down. For this company to hit 100 million in ARR, let's say in 5 to 7 years. What does it mean? How many paying users do they need? How many customers do they need? Does it have to be a 500K, $500,000 per customer contract? Does it have to be 100K? Okay, it has to be a 500K contract. And then you start looking next level. Is the market ready to pay $500,000 for this company in 5 years, right? Then we also talk to CIOs, CMOs, CTOs. How much would you pay?
The questions you just mentioned, do you discuss this question internally?
Yeah, we know with the founder. We are very transparent.
Okay, so those are the questions you expect founders to tell you.
Yes, it's a discussion.
Yeah,
it's not a one-way street.
Okay, that's very, very valuable to know these questions and have strong answers.
Yeah, absolutely. So founders should be ready. These are the questions that we are going to ask. Some other VCs may have more questions too. Right.
How much time does it usually take for this meeting if it goes well?
The first meeting is...
If you cross 10 minutes.
Yeah, if you cross... there is a saying, a lot of VCs decide in the first 10 minutes, is this worth it or not? Even if the meeting is scheduled for 60 minutes.
Yeah.
In first 10 minutes, they have made up their mind. Not that they are ready to invest, but at least, hey, will this go to the next step or not? So you got to catch the VC's attention in the first 10 minutes. Very important. Otherwise, you've lost him.
And then it can go.
And then after that, you do series of more meetings. You meet the team. You do more analysis. You come back with more questions. You learn more. You do competitive analysis, market analysis, and then you see, hey, what they have.
What should the founder that haven't been to OpenAI or any other company, what should be ready? What should he do to get into the first meeting?
I think founders should look at what is my differentiated point of view. What do I bring to the table? Either a domain expertise or some angle of the market that others have not touched. I mean, look at Uber and Airbnb founders, right? They had a point of view at seed stage that nobody else had.
Have you been investing in that?
We no, unfortunately no. But I'm just using these because these are more popular companies, right? But even other companies that pitch to us at a seed Series A stage, we want to see, are you dogmatic about going after this problem? Are you passionate about this idea? Are you going to pursue this? Or will you pursue it for 2 years and say, maybe not working. Let's wrap it up and package it and sell it or get out of it. Right? You got to have the personality traits, stick to an idea. It can take 10 years. It can take 15, 20 years too. Go build it for the long haul. You can't keep... So there are sometimes we see founders, I'll build it and I expect an exit in 3 years. No, I don't know. Good companies are bought, not sold.
Okay. I like that.
Yeah, you got to think like, okay, I'm going to build the next $10 billion franchise here. And in between, somebody comes and starts to make you offers. Okay, fine. Then you can decide whether to sell or not. But that can't be the number one goal. So we look for founders who have that point of view, who are dogmatic, who want to build for the long haul and have some domain expertise. Right? It doesn't have to be from a specific... You shouldn't... We don't look for founders who have worked in a company A or B or C. But you got to bring something that is attractive. Keep in mind, it's not just about raising funding. Let's say you raise a $5 million seed round. Tomorrow you have to hire. How are you going to hire the best engineers out there and then the best sales guys out there to go work for you? Why should they come to work for you? They're investing as well. Their time, mind, energy, family time, a lot of sacrifice. So why should they work for you? They have choices too. Good founder, good engineers get calls all the times. It is very important for founders to be able to articulate what they are looking for.
And to sell your future vision at the time.
Yeah. And same thing for prospective customers. Why should the customer give you a contract?
When you are early stages.
Yeah, when you're at an early stage, you don't even have a good product.
Yeah.
Why should a customer become your design customer early on? And so these are all the traits we look for at when we do early stage investing. We also do a little later stage investing. We have invested in Sam Altman's other company called WorldCoin. It's an identity company. And it's doing very well. And it's going after the market that, hey, as AI bots rise, we need a proof of personhood. How do you prove this is human logging in or bot logging in? How do you do that? Right? Or similarly, if you want to manage passports, verification, etc., you need proof of personhood. So there are a lot of use cases there, and that company is expanding rapidly. So it's called WorldCoin. Right? We are also investors in several Gen AI companies. Groq, the AI inference chip company, that just raised a Series D round. So we are investors in Groq. We are also investors in Cohere AI, which is a Gen AI company for enterprises. So we can go on the list, but I think more importantly, looking at the traits of these founders, they have the wherewithal to believe in the idea, to stick to it, and keep driving it for the long haul.
Mm-hmm. I also saw some company from the Web3 space in your portfolio. Do you invest in Web3?
Yeah, we have invested in a company called Trust Machines.
Mm-hmm.
They are building, it's a Princeton team, professor and PhD student, an application framework so that developers can build apps on Bitcoin. And they believed in that a few years ago when they started the company, and that's when we invested. And as Bitcoin is back up and rising, the number of applications that want to be built on Bitcoin are also rising.
Mm-hmm.
So yes, we have done a few Web3 deals as well.
What about the longevity field?
Longevity field is very interesting. See, there is we haven't done much in that field, but we do believe there is a thesis building up. See, sometimes you also have to think about timing of the markets. It might be a good idea, but is it a good idea today, or is it a good idea 10 years from now? If it is a good idea 10 years from now, then better to wait, right? It's like quantum computing. For the last 20 years, we have seen some companies come up, Rigetti, etc. I don't know if it is ready for prime time even today.
Mm-hmm.
I'm giving that as an example, right? Similarly, there are other ideas, especially within healthcare. Is the market ready to adopt a solution today? I don't have time.
Mm-hmm.
Startups don't have time. Startups have to go fast. Like I said, the velocity of learning is the key for startups, which means they have to pitch to customers, get accepted or rejected, but fast.
Mm-hmm. So,
Now,
yeah. Biotech is not your field, I think. Yeah.
we have done less
Because they usually take a few years without any kind of business development, just researches.
Yeah, but there are a lot of VCs who do very successfully. They invest very successfully in biotech.
Mm-hmm.
Yeah, so I know there are opportunities out there.
Mm-hmm. So you have invested in so many companies that become unicorns later. Can you elaborate a little bit? What are the signs of the unicorns? What common things you?
Yeah, so founders who end up creating a unicorn company, they typically have a vision of the world 2 years ahead of others. So they start building a product before the market knows, before the customers know they need it. And that is very difficult to do also. It's risky because you could be wrong, but they have a point of view.
And you have to be super confident in what
you have to be super confident in that.
Mm-hmm.
Right? And then once you have built that product, then you got to be able to sell and drive traction with the customers. VCs will follow. You have customer traction, VCs will invest. But being able to have that point of view, hey, I want to build a hybrid compute architecture with storage for data centers early on, before the world thought there should be one. Or I want to build what DevRev, I talked about DevRev briefly, what they are doing. Hey, I want to bring the developers and customers together, have a lightning channel between them, use the AI platform and a knowledge graph to bridge this gap. Why are developers not talking to customers? Why do you need in between product managers, program managers, sales managers, etc., and then filter the ideas, the customer feedback ideas to developers? Let there be a lightning channel. We live in a SaaS world, SaaS update world. Gone are those days. You have to send software updates and on-prem and get them deployed on-prem once every few months. This is like daily cycles. So there has to be a lightning channel. That's the vision that DevRev had, right? The other company we just invested in, they are in, I would say, LLM re-engineering space. LLMs have been built and they're continuing to evolve, but there's a space coming up above the LLMs. How do I get the answers I want? Can I tailor the LLM and re-engineer it and retrain it to get the answers I want? Can I personalize it? So that is happening as well. We have invested in quite a few Gen AI companies. Some rounds are not announced as yet, but they will be soon.
Mm-hmm. What do you think about the fast growth? So all unicorns grow super fast in the first years after they've been launched?
We have seen that phenomenon, but the bigger question is you can grow very fast in the first year, but then the bigger question is can you sustain it?
Mm-hmm.
Especially the growth rate, and then can you get to the next level? See, there are a few types of companies. Some of them reach 2 million ARR level within the first couple of years, paying customers 2 million ARR, but then they plateau because the product doesn't have new feature set coming up that the customers really want, or competition has changed, market has caught up. So then they have to rethink. There are some companies that can get to 5 or 10 million ARR and then they plateau. So those do not end up becoming unicorns eventually. So growth is a very humbling beast for founders and investors. You can feel good about it when the growth rate is high, but then you also have to think about what's coming next. Can I sustain it? And then some founders, when they're growing rapidly, they do raise more money. They raise more capital. And the more capital you raise, that means you're raising also at a higher valuation. But then you may not be there to justify the valuation. The revenue may not be there today, but you're justifying it based on the growth rate. So then there's a lot of pressure on the founders to sustain the growth rate. And sometimes it does not sustain. It happens more often than people think.
So, and there are another set of pitfalls, like in every series. After seeds stage, you just figured out how to work on that stage, how to raise those amount of capital. Then you go to Series A. Now you have different metrics to be ready. Now you need to hire another set of people. And I see like in every stages, different problems, pitfalls. How to avoid pitfalls when you cross the Series A stage?
Yeah, the problem is the pitfalls change as the markets change.
And market as well, yeah.
So markets evolve. Markets are dynamic. So you can hire seasoned sales people, head of sales, etc. And they have good connections in the market. They can help. They can also bring a lot of learnings and pitfalls to avoid. But the markets have changed also. Or they may be in a different sector in the previous company compared to where you have hired them at. So there is always a learning curve, even for seasoned sales executives. They can get you the initial meeting. That doesn't mean it will result in a sale.
Mm-hmm. Your large deals, large companies like Nextdoor, DocuSign, Palantir, DevRev, at what stages?
Yeah. We invest primarily in 2 stages. We are actually growth investors, number one. And then within growth, we have invested in WorldCoin, Sam Altman and Alex Blania. Alex Blania is the CEO, Sam Altman is the co-founder. We have invested in Palantir and others as well. We have invested in Cohere, Series C.
Series E.
C. Okay. Yes. Series C. We have invested in Groq, Series D, around this year. And in these companies, we are writing checks sizes between 5 to 20 million. At an earlier stage, we have invested in companies like Wisdom AI, started by one of the Rubrik co-founders. DevRev, started by Nutanix co-founder. A stealth mode company started by an OpenAI researcher. A79.ai. It's creating a pharma-based GPT-style interface for the medical world.
At what stages? And
those are all seed stage.
And what were the check sizes?
Check sizes would vary between 500,000 to 5 million.
Do you lead deals?
We can, but we are not dogmatic about it. We are more interested in the opportunity. Right. And we also we invested in WorkSpan. WorkSpan is led by Mayank Bawa. He the Stanford PhD and created a company called Astra Data that was sold to Teradata for almost 300 million. This is his next company, WorkSpan. He's creating AI for partnerships. Beautiful thing about that company is it's going really after a white space. Most startups are creating software that either sales guys, product guys, etc., HR guys can use, but that's all within the boundaries of a corporation. WorkSpan is going after partnerships. When two companies are partnering on co-sale or cloud adoption, etc., there's no software to manage that. It's still done via emails and Excels and phone calls. So my WorkSpan has done very well in getting thought leadership within that space. So they're a Series C plus company now. So these are the kind of companies we have invested in. So early stage, I would say $500,000 to $5 million. Those have been the check sizes.
And do you invest as angel?
Yeah, we have done a few angel checks as well.
Not you, but I mean you personally.
Personally, yes. Over the years, yes, we have done, but we're mostly focused on you first capital investment. We haven't done angel for a while now.
And can you explain what does it mean venture capital as a service? That's what mentioned on your website.
So we've found that there are several corporations who want to learn about venture capital and also want to invest in venture capital, especially some US companies, but also Japanese corporations, for example. So when they come to Silicon Valley, they want to get into the ecosystem. They want to learn what is happening here. They want to get with good founders, right? So all of those things. So that is the model we created, venture capital as a service. So for corporations who want to do venture capital but don't know how to do it themselves.
And I saw you also have acceleration programs.
We used to.
Yeah,
we used to. We did create early on, actually, in our UFirst capital journey, we did create an accelerator for a year or so, and a few startups that went through that. It was more also to help UC Santa Cruz, University of California, Santa Cruz. That was a tie-up with them.
Very interesting. Thank you very much for your time. Maybe a few advice for early stage founders that you can give.
Believe in yourself. Don't think VC knows more than you. Believe in yourself, but go deep. There's no room for being shallow in this world.
Should founders come to Bay Area?
I think so.
Why?
You uplift your company by at least 10 to 20x. In not just in funding, but in customer opportunities, in hiring. There are seasoned engineers, sales guys, etc., who have worked in 4 companies, 5 companies. And some of them have failed, but they have learnings. That talent pool and also that risk-taking ability doesn't exist anywhere else in the world. So I feel blessed to be living in Silicon Valley, and I encourage all founders to move here.
Yeah, me too. Okay, thank you very much, Sanjit. Thank you.
Thank you, Vasil. Wonderful questions. Thank you.
Thank you.